Welcome to Own the Chaos.
Chaos Crew.
The stock market is crazy and chaotic.
And then there's the Kronos Group. Yes, people, how could I not have a pot stock on this list?
Brad and Fat Man Zoom are here to help you own it.
All right, we got the top stocks to buy if Kanye wins the presidency.
Taking it to the suits, being relatable and hilarious.
That is crazy.
We have a nice super boner, quite a
Holy
lovely
hell.
green one.
Over $31.
We have a nice super boner.
What up, people? What's up, everybody? Welcome to Own the Chaos. It is Christmas Eve. Did you get your gifts, or did you actually end up with a whole pile of coal today for the beginning of the Santa Claus rally? We're going to find that out. But first, welcome to Own the Chaos. The stock market is crazy and chaotic. That over there is Fat Man Zoom. My name is Brad. We've made it our mission to help you own this crazy, weird market. And it never ceases to amaze, Fat Man Zoom. Another weird day today, too. Really, this whole week has been kind of off. Obviously, stimulus has had a lot to do with that, but also Baba took a big hit. I see a lot of people talking about that. I'm sure we'll be mentioning a couple of other things, but today we just decided we're just going to take it easy. We're going to chill. We're going to talk with you guys because, after all, it's Christmas Eve. We got an hour before the market actually closes, so we just kind of wanted to keep it a little informal today.
Yeah, you know, we've been doing really well against the overall market.
Yeah.
And if you look right now, the Qs, I mean, the SPY is flat and the Qs are barely up. So I would consider them both flat right now.
Yeah.
And we've kind of seen, I wouldn't say sideways movement on the market, but there hasn't been any major moves in the market. And as a crew, I think we've been performing really well considering. So you can't win them all. I think this is a testament to it's kind of like testing your mettle in the sense of when you have a bunch of wins, it's easy to sort of let loose and be a little bit more free and liberal with your stops, with your entries, whatever. And these days are the days that check you because we can't have all green days. We can't win every trade. How responsible are you? So I wanted to start with something because let's just get Bob out of the way. And I want to read you something. And I know Christina, she wrote this, so I'm going to sort of bring her up. And then she said she's down 20% on Baba. I hope that doesn't mean you got into it today and you're down 20%. That sounds like you were in it before.
Yeah.
But anybody who got in it today, I'm going to read to you what the watch list said verbatim. Alibaba, stock number 2 on the list. Understand the risk before entering into Baba is the first line. It seems the Chinese government has a target aimed squarely at companies such as Baba. First, it was the anti-IPO that they held up. Now they're investigating companies such as Baba for monopolistic practices. The stock has understandably moved down, and I think it can go down further. It was at 233 as of this writing. But if you're willing to be patient, this could be a huge discount. I would wait to see if this goes down to 220 and wait for confirmation. So those are the two big things. Wait for confirmation and be patient with it because if you looked at it at 233, you're like, damn, it's down 10%. Well, that kept moving and we know that. And we even said in the mentorship, it could go down below 220. But if you picked it up at 230, I think you were impatient because it was a falling knife, like you like to say. And so we need to talk about that. But it was right there in front of you. We broke it down for you guys. What's your comments on Baba?
Yeah, well, I mean, so if you guys don't know what we're talking about our daily watch list that we put out for our Chaos Crew folks. So if you want to be a part of that, you want to get our daily watch list. If this was you and you felt like you kind of really screwed this trade up, then, you know, we would have been able to kind of help you prevent a lot of that heartache. So if you guys want to be part of that, you don't want to make those kind of mistakes again, and you want to get our thoughts on it, make sure you're hitting that join button or get on over to the link in the description and become part of the Chaos Crew. We could have saved you a lot of heartache for $4.99 a month. So if you guys want to be a part of that, make sure you're joining the crew. But yeah, man, I mean, you know, the biggest part is waiting for confirmation on stuff like this. We think that Alibaba is going to come right back. It's going to be just fine. But you still have to wait for your pitch. And we talk about this a lot. I use a lot of analogies with baseball because I think that they're pretty relatable and to a certain extent. But, when I used to play baseball and when I was even coaching, I would always tell people, like, you got 3 balls, you got 4 balls and 3 strikes. You got plenty of pitches to try to wait for the one that you're ready to swing at. Don't try to force it. And that's the same thing that I try to talk about when making trades, especially making entries. Wait for, some confirmation, wait for buying to actually return. Don't try to time the absolute bottom of this or any stock for that matter, because chances are you're going to get burned in the end if you do. And I try to do the same thing with, the top. Don't try to time the top either on fear of missing out. That we always talk about scaling in, scaling out, and that's really the best way to go about doing it. Trying to time it is just going to, it's really going to wreck you. That's what causes accounts to blow up.
Yeah. So to be honest, I'm actually having a good day. And I'm flat in my main account, but in my short-term swing trading account, I'm up 1.6%. It's a little bit unfair because if anybody that's in the crew knows, I sold out most of my positions and I stuck with Tesla. So it's honestly, it's only Tesla, Apple, and Zoom.
Yeah.
And I'm being really conservative through the end of the year. But, Tesla's hit 3%. It looks like it's moving down, but it's the majority of that portfolio. So that's why it's up, which I think it's a misnomer looking at my account.
Yeah.
But Apple's looking pretty good as well. I'm not going anywhere with Zoom. I feel confident in Zoom. But our long-term account, I did want to bring up and mention Baba. Our long-term account, I put in a conditional order. So I put in an order initially for 220, which filled.
Yeah.
And then I have another order for 200. It might be like 203. I can't remember the exact number. But if it hits that, it's going to add to it. It's already automatically set, good till cancel. But I feel really good about it. And like, I know how hard it is for you guys that are in the crew. I know you hear these runs and these gains. It's hard for me too. And I don't think people realize that. We talk about trades all the time, but we're not always in the same trades. Like IPOC was one we were talking about below $10. And I actually had gotten in and didn't stick with it. And then you got in, but I had been looking at it for a long time. I liked it and I missed it. And and it's been hard to hear you get excited about it. And a number of times I've been like, I want to get in, but I'm like, I got to be patient. I can't allow your excitement to, because you got in at $12 or $11 to get me to FOMO into it. But I get it. It's just as hard to crew to hear us talking about stuff as you. And I know you had the same feelings towards Tesla. And we talked about our 2 different strategies on Tesla. So I'm sure that's not easy as well to sit on the sidelines.
Yeah. Yeah, absolutely. And it's just making sure that you exercise that discipline, and it takes time. So if you guys are newer at trading, don't think that you have to have it all figured out right out of the gate. I've been trading for 7 years and I still struggle with that every now and then. Not as often, obviously, as when I first started trading, but there's still those moments that you have, and it is what it is. But yeah, I mean, don't try to beat yourself up about it, but also understand that, there's always going to be opportunities, even with some of your favorite stocks. I'm looking at Tesla right now and thinking it's probably going to continue. It may likely can pull back to a point where I'd feel comfortable with it, even if it doesn't come back down to the low 6s. If I see a sharp enough correction, then I'll probably start to work myself back in. But I'm going to sit here and sit on my hands. And you can make arguments. We've seen BLNK and Plug and some of these other energy stocks go absolutely insane. And people keep asking me like, well, why didn't you get in 2 weeks ago? Well, 2 weeks ago, Plug was up 800%. Now it's up 1,000%. Could I have made more money on it? Sure. But am I going to chase something like that on FOMO on the chance that it continues to go up? Absolutely not. Because, and I've seen this movie before. Sometimes, the outlier is that it keeps going, but in most cases you end up getting crushed. And really, in those companies with Plug and Blink and some of the other ones that have just gone absolutely crazy, the fact that, if the CEOs of those companies don't do some sort of offering, they're idiots. And so if the offerings come out, I'm sure that they'll probably be quite large. the rug will probably get pulled from those. And that's kind of like the opportunities I'm looking at to get into those types of things. So when I'm looking at something that I feel like I missed out on, I'm like, okay, where's the downside to where I could probably try to plan to make my entry? And so that's a really good way to kind of look at it. Don't try to focus on the here and now, focus on, further ahead, see where there's going to be opportunities potentially for you to hop in.
Yeah, absolutely. And I worry about people who do chase those type of situations because, all right, it's around 500%. And there's times, I mean, Zoom, we got in when it had run already, but like, we felt like there was more room to run.
Yeah.
I worry about people getting in there because I feel like it doesn't give me hope that you're going to be able to get out, because if a stock has ran 500, 600%,
yeah,
and you're getting in, I feel like when are you going to be happy? Because are you going to be happy with just 100, or are you going to try to get another 500% run?
Right.
And so there's just so many things not in your favor. And what we try to do is we try to create situations that are overly in our favor. There's always risk in every entry we make, but they're overly in our favor. And a good one comes to mind is Facebook. Facebook, they have some things that we know about that are similar to Baba as far as like government oversight and scrutiny.
Yeah.
We're not worried about it. They've had some challenges with just content in general and the political situation. They've had issues with Apple, all these things coming up, but none of them make us sour on their growth prospects or really feel like they're anything material.
Yeah.
And so you look at all that and we're like, okay, we know what's in front of us. We feel okay with that. And then we look at the catalysts and the tailwinds and we're like, damn, there's just a lot of stuff going well for it. So understanding that and really understanding the metrics that are important to you. But what I wanted to point out with Baba, hey, can you confirm this for me? But I believe Baba had IPO'd in 2014. If you could just confirm that while I'm talking.
Sure.
One thing I want to say, because I'm glad that I like sort of the general sentiment of our crew as far as Baba. Mad Dick says, what's going on, man? Baba's just fat Facebook and Google that we deal with. Buy the dip on Baba. It just seems like nobody's freaking out. And this makes me feel good about it, because the one thing we talked about in the mentorship, look at all the other Chinese companies, JD, Baidu, Pinduoduo, like those are the ones that people keep talking about. They're all down, and I haven't looked at them recently, but we're in the mentorship. They were all down about 2%, and Baba was down 11, 12% at the time. Now it's down even more. But like, to me, that's okay. Baba's getting the heat because it's the biggest one, and because of already what happened with the Alipay situation.
Yeah.
So I think it's not reasonable. Baba, am I right about that? The IPO date?
Yeah, September of 2014.
And it IPO'd at $100. So you're only talking about 100% move. It's nothing crazy. So when we put that all into perspective, and we call this the Chinese Amazon, which I really don't like because I think it's a little bit different, but let's just say it's the Chinese Amazon. If we do that, we look at the growth opportunities and it's huge. And when you look at, I was reading something that I think Amazon was up 120,000% since their IPO in 98 or whenever it was, 97.
Yeah.
And if you put $1,000 at the time into Amazon, it would be $1.2 million. So what does Baba have in store for it? It's already got $60 billion in cash. So if you look at Amazon, it's already ahead of the game because Amazon was not profitable for years.
Right.
So somebody had also mentioned the fundamentals. You're looking at the right things, people, but it's the long-term game. I don't know if anything's going to happen in the next week or so, but I do feel confident in the next quarter, in the next 6 months, a year, definitely, this thing's going to be right back up to new highs.
Yeah, absolutely. And actually, it's crazy to think about this. I'm going to just bring you guys over to the chart real quick. I pulled this up on the monthly. We're seeing levels on Baba that we haven't seen since 2018. So it's pretty crazy. It looks as if, June of 2018 was the last time it was down in this 212 area. Actually, no, I'm sorry. That's wrong. I was just looking at this as a support. So this 212 area actually is a support. So let me correct myself. The last time we saw this down here was
during the pandemic, right?
Yeah. Well, yeah, during the pandemic, and it came back and retested this area back in December of 2019. But so it still has been a while since we've seen it down here. I think that with it continuing to come down, this looks to be like a really decent area. So my apologies. I was looking at this area back in 2018 thinking this would be good support and just came out of my mouth that way. But I think if we look at this, it really looks like a really decent area. Hopefully this holds here. If it does, it's going to be a good spot to scoop it up at. But you were saying off air, if it comes down below 200, it's like I'm just going to gobble up as many Baba shares as I can. Essentially, it would be almost like a no-brainer, major overreaction that we're seeing out of this thing.
Yeah, I mean the risk is nominal compared to the upside on this.
Oh yeah, especially all the way down here.
Yeah, and here's the thing: it should just bounce back in general. I expect 2021 to be Alipay. For Alipay to go through the IPO, and that's in 2 markets. It's Hong Kong for sure, and I believe maybe Taiwan. But as long as those go through, like Alibaba is going to bounce back no matter what. And then if they add that to the mix, this thing's going to go off. So I'm going to be in it definitely in the long-term account at minimum till the first earnings of 2021. But man, this is a perfect example, guys. Don't go crazy. Scale in. We say it time and time again. Scale in. It could go down lower. But these are the situations that become great opportunities. It's not when things are green and you add on to green. That's the biggest mistake people make. Yeah. It's when things are down and you see an opportunity when they're down. We call it the red zone. Are you willing to punch it in that moment and be patient? So this will play out. I have so much confidence in this, man. Yeah, it feels good. I think that it just seems right. Just seems right to be looking at this as a buy. Being greedy when others are fearful. I did want to bring up another topic because I know I had some thoughts on Rocket that I haven't discussed with you, and I know people are asking about Rocket. This one hurt today. Let's start with the chart and talk about what it's done because it had a nice move down. Yeah. So just looking at the chart here, and I'm gonna pull this up. Here we go. So it had a little bit of a down day. I think a lot of this has to do with the lack of stimulus. I think that's the major reaction from Rocket today. It appears to be that way anyway. When you look at some of the other stocks that have reacted to the stimulus news, Rocket kind of falls within that same category. So not really a surprise to see this pulling back, but it's still very much on a nice upward trend. If we look at it in the 4-hour chart, it's still within that. So I'm really not concerned about it. It doesn't feel great. It kind of sucks, but we're still in an upward trend. And so that kind of gives me a little bit of peace of mind about it. Yeah. And I see that Sean McGuley, is said he got out of Rocket for a break even, sick of looking at it. You've been in that position before. I know you've said you kind of got tired of stocks. Yeah. Again, these things test you. I don't love getting out here because it stayed in this range. Yeah. I mean, if you said below 1950 or below $19, I get it because we don't know where it goes from there. But it stayed in this range and it doesn't necessarily surprise us. Yeah. At least I don't think it does. No. And so, again, volatility. This beta is going to make it move far further down when it's a tough day, but it's going to move faster up when it's a good day. So the thought I had, and it's kind of related to Rocket, but it's home building in general. And I think this is going to be so blatantly obvious, but we haven't talked about it. And I haven't truly fully processed it. So the issue with the housing market right now and where really the bearish, the headwind case for Rocket is there's no demand. Yeah. What's up? No, I'm just saying. Your face was you make that face usually when there's YouTube issues. Sorry. No. There's no demand. I was distracted. I was looking in the chat. I was looking at the chart. I was all distracted. Sorry. So there's no demand. That's kind of the common thesis is that's the issue. When demand comes, we expect things. Sorry, not demand. Supply. Demand's through the roof. Supply. There's no supply. Supply, yeah. And I was thinking about well, when's that going to happen? And what came to me, when you think of something that's so obvious, you're like, how didn't I think of that? And this is going to be stupid. But what came to me was, well, why would you sell a house during coronavirus? Like lockdown time. Yeah. I get rates are high and there's certain people that are really willing to take a risk. Rates are low. But why would you uproot yourself when there are so many question marks and make huge changes during that time? Right. So if I own a house, I got to find a new house. I got to find a new space. And if I'm really worried about COVID, I'm not going to risk getting COVID because I got to deal with movers. I got to deal with all this stuff. And then also, I'm not going to know where I'm going to move because of uncertainty. I get now why there's no supply because I'm like, well, prices are so high. So I think
it's not just prices. Sorry to cut you off. It's not just prices. It's also the mass exodus from major metropolis areas. And most of those people were renting. So you're finding people that were already looking to sell a house and they're moving from a rental space to a home. And that's the big issue because people that already own their homes aren't readily selling them to move somewhere else. It's the people that are coming from the cities that were most likely renting and then trying to find a house. And that's kind of where the supply issue is for the most part. I'm not so sure it has to do with cost as much as that.
No. What I'm saying is, why is the release not coming on supply?
Oh, yeah.
Like, because you would think if prices keep coming up, you're like, let me sell my house because I can get top dollar for it.
Yeah, right.
Right? It seems illogical because it keeps, somebody just said here, Anaida said San Francisco Bay Area housing market, which was down, is now back. Multiple offers going much above asking price. That's everywhere.
Yeah.
Almost everywhere. Even New York has bounced back. That's passed. So anybody worried about that, basically, if you sell your house now, you're going to get multiple offers most likely, and you're going to get above your asking price, if not your asking price. So that's the question. Like, why wouldn't people that need money just do it? And I think that's why. So if that's the case, then when we do have clarity, I do think we see that influx.
Yeah.
And if we don't, that's why D.R. Horton was on the list and why it's been on the list, DHI. Then the home builders crush it no matter what.
Right. Rocket
benefits. But I think home builders continue to benefit. So I know that's really obvious, but like for anybody concerned about that, it boils down to a supply issue. We're waiting for supply to free up, but when it frees up, it's going to go crazy. And I personally am happy that Rocket's doing this because it's going to free up.
Oh, yeah.
Right in the high season, right when we begin the high season, March, April. And, I know, guys, we've talked about this a lot, but you got to exercise patience. We've moved this out of our short-term swing trade. This is our long-term account, and it's not going anywhere. We're full position size in it.
Yeah, and I mean, today I'm a little red on it, but I haven't been red on this for a while. So it's not even, I mean, some people could argue, well, you're just holding a bag at this point. I'm like, I'm really not. Like, this is something that I'm pretty much break even on, and I'm just continuing to accumulate a position because this thing, I don't want to wake up one day with this because I know that this will happen. I don't want to wake up one day and just have it go the hell off and miss my opportunity. So I think this is just a really good stock that we've talked about a lot. And I know that a lot of our long-term diehard followers may be sick of hearing about it, but we just wanted to continue to hammer home. This is the largest mortgage lending company in the country. So for it to just continue to sit here just seems kind of silly. And once this market, especially housing market, really starts to free up a little bit, going into springtime and, with vaccines and all that stuff, being in the mix, I think that it'll be huge. It'll be huge for the company, it'll be huge for us who are in it.
So for anybody wondering, I can't make it any clearer. I don't think it's going to change the strategy wise. Below 1950, I will consider getting out of it. As it approaches $18, I will look to get back into it.
Yeah.
That's the only move I'm going to make. Most likely with the long term, there's a chance I won't sell out, but like I'll keep my eye on that. Those are the levels. Before anything above 1950, there is no way you're going to get me out of this stock.
No.
So I just want to be clear to everybody because I know the questions are going to keep coming. There is nothing that's going to change me to get out of it at $20. It just doesn't make any sense.
Not at all. And again, like we're looking at this chart here. We're still on an upward trend. It's just a weird day. That's all. Real quick, just wanted to welcome Josh Meininger in. I think is that Meininger to the Chaos Crew. Thanks for joining, my man. So anybody who is curious about the Chaos Crew and about being a channel member, hit the join button next to subscribe or the link in the description. You want a daily watch list from us. You want private live streams, helpful YouTube videos for tips and tricks of the trade. then hit that join button. For $4.99 a month, you get all that stuff. And there's also a level 2 where you get access to our Webull portfolio that is up over 60% year to date. Really great stuff. And we haven't been doing anything fancy, just buying into really great stocks. We're taking losses here and there, just like everybody else, but overall, it's absolutely crushing the market. So if you guys want access to that, make sure you're hitting the join button. It would help support the channel and help support our future endeavors. We're getting ready. Actually, guys, we're going to start our very first Stock Watch Sunday. Can I go ahead and say this?
Yeah.
Our very first Stock Watch Sunday from our new studio will be January 3rd. So we're just about there, folks. We're just about there.
Sir.
And we couldn't have been able to do that without you guys being part of the crew. So we appreciate that. Absolutely. So I'm looking forward to it, man. It's going to be a lot of fun.
Yeah, it's going to be great. We're slowly moving in. We have a huge space.
We got a lot.
We're kind of piecing it together.
Yeah.
But yeah, it's going to be exciting. We have some good questions. We'll sort of stick to the housing theme right now. NASCAR All Out asked about a stock you're in. So is Open. What are your thoughts on Open? Is Open going to be the new Rocket? So Open, for those who don't know, it was previously IPOB, which was a SPAC play.
Yep.
Reverse merger happened this week. Now it's Open Door, which we've liked from the jump. We've been looking at for a while, but you actually have it in your public account. Yeah.
So I've looked at various pullbacks on Open Door and have bought into those, and I've accumulated a position here in the Webull account. I think that Open Door is going to continue to do really, really well. I've talked about this before. About how ARK Invest has divested some of their Zillow position to scoop up more Open Door. And Open Doors is got a much larger platform. And this is going to be the way that people buy homes, I think, in the future. And, there's not 1 ounce of me that's ready to sell this at all. With the housing boom and everything else, I think it's going to be great. It's going to be huge.
Nice. The next question is regarding, just a comment from Ivan Broski. First of all, Ivan Broski, Brown Bear, new to the crew. Ivan, what a great name. Like, you belong in the Chaos crew with the last name Broski. I wish my name was Broski, or handle was Broski. I'm from Detroit. Quicken Loans is huge. Rocket will do well in 2020. We couldn't agree more.
Yep.
Jose Matute thinks that Rocket is likely to go up when unemployment goes down. Kambiz Amadi Brown Bear. Hello, Fat Man and Brad. I'm new to trading, investing. I'm up 78% on the year, but I feel like I've been lucky.
Yeah.
What, in your opinion, is a good target return percentage for a rookie so I can set my own expectations? First of all, great job.
Yeah.
That's awesome. That's just imposter syndrome. You feeling like you're lucky is imposter syndrome.
Yeah.
I get that. It makes sense. And there will be days where you will essentially be lucky. But the fact that you're aware of that, I think, is the biggest indicator that you'll be fine. For me, I'll say just beat the market. That's it. And the market averages 10% of return a year. I know it doesn't sound great, but like 10%, if you beat that, you're beating a savings account and you're beating the market typically. And if the market's up 30% in the year, try to beat 30% in the year. That's what I use. What about you, Brad?
Yeah. And really, you're beating a lot of the hedge funds and stuff like that out there too. So you're absolutely crushing it. So don't feel like you don't deserve to be here or anything like that. You definitely do. So and really great job. And I agree. I think that the fact that you're just at least recognizing the fact that, maybe I needed to take a step back and realize that this probably isn't something that's actually sustainable, which I would agree. I don't know if an 80% return every year is very sustainable, but yeah, if you could just, set the bar to beat the market, which is on average around 10%. And that's actually what we're looking at this year. So the overall market right now is right around 10%, 10 or 11. So, if you're crushing it, awesome. And I get that way sometimes. Sometimes I get into this mode where I feel like I can't miss, or I'm just not missing for like a week or two straight. Everything that I'm touching just turns to straight gold. And I'm like, I know my time's coming. As long as you're aware that it's coming, you at least know how to, prepare for it and all that good stuff. So don't worry about it.
Ashley L, do you have a favorite ETF? If you were in the crew, Ashley, you would actually know because one was on the list.
Yeah.
But do you have a favorite ETF, Brad?
I don't necessarily have a favorite ETF, but one that we definitely have our eye on, and one that I'm currently in on this Webull portfolio that I just hopped into the other day is SPCX. If you guys are wanting to know how you can, hedge your bets or, maybe not miss out on the next SPAC run. This SPAC ETF was just created for that reason. If you guys don't want to try to figure out what the next SPAC is as far as where it's going to roll to, this is one that I'm taking a chance on. I don't have a giant position in this or anything like that, but I think that there's definitely something to be said here. It's actively managed, so they're going to be in and out of stocks that have a lot of potential to them. So this could be great. I mean, over the last several days since this is open, it gaps up every single day, which is crazy. But this is actually one that I like. You can't go wrong with the ARK Invest ones. They're actually in the top 10 ETFs. They might be top 5 ETFs in ARK, a lot of the ARK Invest ones. I had a list of top 10s this month or this year, and I can't remember off the top of my head, but I know ARK is in there as well. There's a couple other ones.
Yeah, a lot of people bring up ARK. I think ARK F is one of the popular ones. That's the tech one. But yeah, I mean, for us, we're extremely bullish on SPACs for 2021, and we're learning more about them. So the more we learn, I feel like the more excited we get into them.
Yeah.
Because we aren't big fan of IPOs. We don't typically trade IPOs, but these SPACs look like great opportunities. And so far, we've seen some success. But I feel like 2021, you're going to be hearing about that ETF all over the place. I really do.
Yeah.
And for those, I don't know if you mentioned this, I was trying to do something else, but for those that know about the IPO Cs, the main reason why we even stumbled upon this is because it's leveraged all the IPO, whatever the social capital ones have been. So D, E, and F are already in it. So if you're not sure which one, because they're all three are different, I think that's a way to hedge your bets in general.
Yeah.
All right. Next question. We had a question regarding Drive Shack. Tim G, what's going on? Can you discuss the shelf offering for Drive Shack, what it means and what to expect?
Yeah, so I actually have my Drive Shack hat on, courtesy of Fat Man Zoom. But I actually talked about this morning amongst a lot of our mentorship folks, which if you want to be a part of that, I go live from 9 to 10 a.m. Eastern time every day with our mentorship group. And I really want to try to rebrand it because it's not really a mentorship anymore. It's just a really great community, and I just happen to give my thoughts on things and people like to listen to them. But if you guys want to be a part of that, links in the description. I'd love to have you over there. But I talked to folks about Drive Shack. So they have a $500 million shelf offering, and they plan on spreading this out pretty much everywhere. It's going to be done in stages, so it's not something that's just all going to be dumped all at once. But this is a perfect opportunity for Drive Shack to do an offering, and this is why I keep saying that, like Blink and some of the other ones that are just high flying, they would be idiots for not doing that. Some sort of offering. And so there are right ways and wrong ways to do offerings. And let's be clear, nobody likes an offering, no matter how good or bad it is. But there's a responsible way about going about it. And I think that Drive Shack's doing it all the right way. They're spreading it out. They're doing it over, in multiple areas of their share structure, preferred shares, common stock, warrants, all that stuff. And so they're not just dumping it all on us, the retail investor. They're spreading it out evenly, but they have to be able to raise money to be able to grow, to be able to build more Drive Shacks. And so they're taking advantage of the recent run up that they've had. It's moved up 300%. So I don't blame them here. And it's nice to see that they're actually doing this responsibly.
Yeah. And not just Drive Shacks, but we had mentioned a new concept called the Puttery, which is going to likely be a bigger concept than Drive Shack as far as like the balance sheet's concerned.
Yeah.
They're more profitable. They're going to be paid off quicker. They're smaller, lower cost to produce, and they're going to be in urban areas. So as far as their growth strategy, I really feel confident in it. I know you feel the same way. You need money to do it. And I think they're trying to strike while the iron's hot. So if we were execs, I don't think we would do anything different in that company. So if you can see that, those situations I feel more confident in. If I can't explain why you're doing it, then it's like, or if it's like an egregious amount, then it gets a little bit ridiculous. But you got to grow. Like you got to grow. And they specifically said in their last earnings, We think this is a great opportunity with corporate real estate, commercial real estate being low at lows and continuing to go lower as far as their forecasting, so we can get cheap rates. That's smart.
Yeah.
It's genius. I don't want to say it's genius, but it's smart. And so they're just trying to make a move on it. And I can't remember the exact number, but they haven't opened their first puttery yet. They'll have double-digit putteries next year. So they only have 4 big locations.
I mean, hell, we're taking advantage of the low commercial real estate prices as well, just from the studio. The studio, we're the only ones in the entire building. So it's pretty crazy that, if you have the ability to be able to take advantage of those areas to help your business or whatever it is, then like now's the time to do it. And Drive Shack is just taking advantage of it too.
You know what? One stock that I did not follow, today, I saw this morning, but Square was one that I meant to keep my eye on, and then the day got away from me. But Landon L asked, what do you guys think about Square news involving Jay-Z? So they announced, rumors are that that Square is in talks with Tidal to purchase Tidal. Nothing's official, but when you say Jay-Z is talking about Tidal, what do you think about the news? We did discuss this also in the mentorship this morning.
I think the news is a little, I don't know. I think it's just overblown. I don't think it's really a big deal, but it's definitely something to just keep note of. I don't know if that was also the reason why it sold off, but, Bitcoin had a little bit of a pullback. And then, obviously with the stimulus stuff, that's probably had taken its toll as well. So I'm not sure that this news is why Square sold off. It may be. I think perhaps there's a case you can make to where if Square does end up acquiring a Tidal, that investors may think that it's a stupid investment. I don't think so, though. Like, if they can create something and they have the cash to be able to build something that could rival like a Spotify or something like that, then I think that definitely would add value to Square. There's one thing that we know about Jack Dorsey is that he's not an idiot, despite, whatever opinions you might have about him. And he's extremely intelligent. So if he's going to make an acquisition like this, he's not going to do it because he's just looking to spend some money. I think that he will do it in order to be able to continue to add value to the company.
Yeah. I definitely don't love it. I don't understand it. I think there's other opportunities and avenues that can go, but if they explain it and something makes sense, like, I'm definitely all ears. But what I had mentioned in our Discord was, I think it's great short-term. I question it long-term. So I'm not saying it's a bad investment or a wrong investment. I'm having trouble seeing why it makes sense.
Right.
But my goal for 2021, I think I might get you over to PayPal. Before the end of 2021, I think you're going to be a number one PayPal fan.
Maybe.
I'm gonna spend a whole day and I'm gonna make my case, and by the end we'll see if we can convert you. But no, Squarespace has too many other good things going for it. And I mean, these guys, PayPal and Square, they're gonna be around for the long haul, and you could just see them popping up more and more places, and they're just putting their fingerprints on a lot of things. It'll really be interesting to see what happens to Visa and MasterCard and American Express. Like, where's their space? Because there's a lot of competition with, and the Apple Card came out. And I know those are going through MasterCard and Visa, so maybe that's their move.
Right.
But it's going to be interesting because now Visa and MasterCard seem like the old dogs.
Yep, absolutely. Absolutely. I agree. Big Felix, bro, I know you've been a Chaos Crew member for a while, but you got no idea what you're talking about. So for those of you who are just watching and not paying attention to the chat, he says, Drive Shack has been going down since I got it. First of all, I don't know why you bought it all the way up there, because we've been talking about it since way before $3. Second of all, it's another rocket. No thank. It's a pump and dump. Pump and dumps are not what Drive Shack is. You want to pump and dump, go look at something like Kodak or Nikola or something like that went straight up and then straight down. Drive Shack has not been doing that over those last several months. This has been doing nothing but going up. So if you bought this at the highs, that's on you. You got to buy little stocks low and sell them high. So if you're doing the opposite, it's a you problem, not the stocks problem.
Yeah.
I don't know how many times we got to tell Big Felix this. He does this all the time. He did it with Peloton. Peloton was a pump and dump too.
That's not what my account shows. Honestly, it sounds like you need to reflect on your strategy. That came off like pretty harsh, but like, think about your strategy. And if that's what keeps happening, if other people are making money, I mean, we're still in certain things that you're talking about. We're still in Rocket. So like, but we specifically did point out multiple times, listen, it's hot up here. And there's certain things that like we just talked about with IPOC. I missed it. I missed the boat. I'm not going to jump in and then, like Brad has 20% gains and I have negative 5% gains. Like those situations happen. So I would evaluate your strategy and start with your entries and then scaling. Are you scaling in? Like what's happening that you end up holding the bag on some of these things? Or I don't even want to say holding the bag, but you end up red in general. Maybe it's just a patience thing. So anyways, I'll be done with that. Were you going to say something?
I don't know why he's saying that I missed out on Peloton, because I have actual evidence of him complaining about Peloton being a pump and dump and how he missed out on it. I don't make me go find it, bro. I'll bury you. I will bury you.
Well, we're up in the long-term account. We're up on Peloton 50%.
Yeah, I said that Peloton was going to hit $100 back in early fall or late summer. And then I remember him specifically shitting on me for that. And then now look at it.
Ema said SPCX has a 0.95 expense ratio. Why not just go with ARK-K for 0.75%? That's a fair point as far as talking about the expense ratio. To me, 0.2% for what we're doing and the time frames we're doing is nominal. So that's why I think it's fair, especially if you're thinking about compounding for the long term, adding, if you're just going to continue to grow it. I think it's a fair consideration, but to me, it's too nominal to matter.
Yeah, agreed. Yeah, I actually did catch that. I saw a couple people talking about Jeremy shorting Peloton. I don't understand the bearish case for it, and I haven't heard him talking about it. And maybe he's got some good points, but man, there's not one shred of me that would want to short this stock.
I think the only things people can say is like they're fearful, like the move, right? Like the valuation.
Yeah,
but demand is so ridiculously high. I feel like there's demand through 2021, and I could potentially make an argument through at least the first half of 2022. And I guess reopening. Yeah. Like I think the vaccine is probably the most likely argument. Somehow, man, I know I've said this multiple times, but I think people missed the NASDAQ 100 entry. I think they missed it with all the Tesla entry information. Is that fair?
Probably. I mean, it definitely didn't make headlines. That's for sure. But the other thing, I think that people, and I mentioned this before, even though, and you have been like, how do people not realize how big this is? But the Precor acquisition is monstrous. And I think that obviously the price has reflected that over the last several days and it's doing really well. But I'm telling, like, the way that they were able to acquire Precor and how this is going to help them keep up with demand is just absolutely incredible. And Precor is just, it's a huge company. The fact that they have them now is just we could very well see Peloton 250 next year at some point in 2021. Peloton hits 250. I think that that's definitely a possibility because of the way that we've seen demand, and it's not going to go away. People always forget too that it's not just about the units that they're selling, the bikes and all that. It's also the recurring revenue that they're bringing in. So like, there's so many good things going on in Peloton. I don't see a bearish case for this at all. And I mean, I just don't. It's crazy.
Definitely not long term. Anything anybody tries to bring up, it's pretty much short term.
Yeah.
But definitely not long term. And again, I wouldn't say to get in right now. I would wait for a pullback on it. But like, that's the point. When we say these things, a watch list is just what it's called, a watch, not buy.
Yeah.
Just wait. And don't worry about the move being done without you. Peloton is just like is very similar to the other remote play stocks, which they move quickly, up and down. And so, yeah, you're right, man. And the recurring revenue, I would argue, is more important than anything because it doesn't matter if they sell bikes or not. They could stop selling bikes. They can do something else.
Yeah.
They'll kill it. Their churn rate, and for those who don't know churn rate, it's basically your turnover. So how many people leave? How many people cancel their subscriptions? Their churn rate is less than 1%, which is unbelievable.
Insane. That's insane.
Unbelievable. Nobody has that low of a churn rate that I know of.
No.
And it's not even close. So they have that is a testament to the product, to the loyalty, the brand loyalty. So everybody who's telling me like Echelon or whatever the companies are that compete against Nautilus. Whatever. Like,
It's not even close.
No, they don't have that.
I mean, even Bowflex trying to come up and catch up with them. I saw Bowflex bike, and it's like people are trying to. I saw somebody say that the people that are making bearish cases that it's nothing but a bike with an iPad on it, and they just they really don't get it.
I think the mistake most people make is they look through the lens of it as a bike. The bike doesn't matter, people.
No,
look through the lens of a recurring model. The community is what makes a difference.
Yep.
Just like why we like Penn and their community. If you have a community and they're paying recurring money, you can do whatever you want to with them.
Yeah, yeah, absolutely. So, and that's a big key. That's why I liked Penn over all of the other gaming stocks and gaming companies, because they have 66 million stoolies on their side, whereas some of the other there's no culture, there's no community surrounded around any of these other gaming companies. You know, you have pioneers that lead them for you, like Pat McAfee and FanDuel and some of the other ones, but you know, you don't have that attachment to Penn and Barstool like that with anybody else. And that's why we like them. Same thing with Peloton. You go to like a Planet Fitness, for example, and it's a great business model, what have you. It's good for people who, you know, maybe are trying to get back into the gym or whatever. But obviously they've done really well for themselves leading up to the pandemic, but there still wasn't a community that you could actually attach yourself to. I think they tried to, but they never actually really kind of made that happen. Whereas I think in Peloton's case, they have. And once you feel like you're a part of something, you find that you're not going to really leave as easily. And to be fair, just kind of draw a direct comparison on a micro level, us, you know, the Chaos Crew folks, we don't have people that leave because they feel like that we've made them feel welcome in the community that we have. And I think that that's just so much more powerful than anything else. It really is.
Yeah. I don't know if Big Felix, I don't know if I appreciate your comments. I don't know if you're trolling, like if you truly believe what you're saying, because it just sounds a little bit outlandish, but I'm going to comment on what you're saying because I also want to, it ties into Precor. And for those who don't know about Precor, I think we need to explain a little bit more. So Big Felix says, once gyms open, Peloton will tank. And here's our thesis. Now, you could be right. I'm not saying you're wrong. I do think that once gyms open, Peloton could see a pullback. Right? Like anything could cause it a pullback, but that's a buy for me. I'm buying.
Yep.
But here's what I don't think you're considering, or what I'm considering that you're not saying. The Precor acquisition actually ensures that they benefit from gyms opening back up. Why? Let me tell you what the Precor acquisition is. So Precor acquisition, Precor is a company, and you've seen them, you may not have realized them, but they make commercial ellipticals and treadmills. That's what they're known for mostly. And they are positioned squarely in commercial. So fitness centers, colleges, corporate spaces, all that. And so the initial reason that Peloton partnered with them is because they have 625,000 square feet of manufacturing space. So their biggest issue right now is customer service, issues with customer service because delays and satisfying demand. So that addresses that immediately.
Yeah.
One of their long-term initiatives that they wanted to begin in 2021 was getting into the corporate space, the commercial space. That squarely allows them to leverage the connections. You mentioned Planet Fitness, 24-hour fitness. Precor's already in those. So you're established that infrastructure to transition seamlessly into the corporate infrastructure. So gyms are the last things people are going to go back to. I don't know why you're thinking like, I know people are going now. You can spare me on that. But as far as like people like dashing to sign back up to gyms, I don't see it coming back as quickly. I think there's going to be a phase in for people to start going back to things. And it's the least socially distanced activity. So gyms booming. I don't see that happening. I see Peloton continuing to move. So like what you're saying, like gyms opening back up. Okay, well, they're getting into the commercial space. So I don't get it.
Well, that's just it. Like, who's to say that gyms can't buy up Peloton bikes and row machines and treadmills and put them in their gyms? People want to go back to the gyms. They're still going to have Peloton. I mean, and Peloton owns Precor now. So like, I don't know. I don't understand the argument. I don't think it's going to make a dent. if gyms start opening back up on a wide scale. I think that Peloton benefits on both sides, and they were able to pivot. I think they actually saw this happening. They might have had that thought of, well, what happens when the gyms open back up, and we might not have the demand, and they covered that by buying up Precor. So,
yeah, okay, we're done with him. He just proved that he's talking about CrossFit. You lose me when you talk about CrossFit. You clearly don't know anything about.
We just lost all credibility. The CrossFitters.
That's embarrassing. CrossFit. What are we? 1999. Oh my god.
What else do we want to talk about? I feel like there's something.
Let's check in on the market real quick.
Yeah. So the overall market right now is just slightly green. It's just been. It can't pick a direction today. And honestly, I can't say that I'm surprised. It's a half a day. We're about to close in about 9 minutes. So not a big deal. It's just kind of flat. I saw a lot of people asking me about Penn and IPOC. IPOC was something that I've been in since the $11 range. And it has been an absolute monster, hit up to 1535 just today. And so if you guys were able to get in when we had this on the watch list, you are sitting pretty. Have not yet sold anything, and don't plan to, probably until next month. I think leading up to the ticker symbol change with Clover Health and all that good stuff, I think that we'll see even more hype going into the new year with this. So I'm just going to hold on to IPOC until we get closer to that date, and then I will make a decision on what I want to do with it. But right now, this has been a monster win for me. I actually went in a little bit larger than I usually do, and it's paying off in a big way. So feel really good about this. IPOC is definitely something that I'm continuing to hold on to. So I know a lot of people, I saw a lot of questions about that. Penn National, what else can you say, man? Made a run at $100 yesterday. Didn't quite get there, but was super close. And I don't know. It feels good. I think that Penn sees $100 soon. But I did not anticipate this move. I did actually trim a little bit more out of Penn National as well as it made its way towards that $100 spot. So, yeah, I think that if it does end up getting up over 100, I'll probably keep about 50% of my original position size in there, and I'm not going to touch it. I think it'll just turn into a long-term position. And then anytime I see a significant dip on Penn, it's just another opportunity to add some more and continue to building that position. This is going to be something that I'm just going to be more or less revolving in and out of, I think. We talked about how gaming was going to be huge for 2021, not just for Penn, but for all gaming. But you guys know how I feel about Penn. So, yeah.
Online, like gambling.
Yeah, online. Gambling as far as games and the gaming stocks and stuff like that. But yeah, it's gonna be awesome.
You guys, we've talked a little bit about the long-term investment account. We haven't fully integrated it, but we're going to integrate it into the Chaos Crew. So when Brad talks about his account, that's the public account, but that's short-term swing. So the way we kind of identify it is we're not going to hold it longer than a quarter. So usually it's weeks. It could be days. It could be weeks. The swing trade is typically held overnight. So it's days, weeks.
Yeah.
Maybe it could be months. But typically that's what it is. The long-term swing trading account is going to be 6 months to a year. So it's going to be longer than earnings to earnings, longer than a quarter. We will have a formal integration of it, but we started to slowly integrate it between us two. So you guys are aware. I've got some orders in, and remember, because this is long-term, I'm putting good till canceled orders. And so I'm being really conservative in my entries. I filled Baba at 200, 220. I already said that. And then I've got it at 200, which if you look at Baba now, it might not even get there. It's looking pretty good.
I was just watching it. It's just bouncing pretty good.
Facebook, I've got a 265, and the order's been in for the whole week. One day it might get 265. I got an order for Facebook in. Walmart, I've got an order for Walmart in. SPCX, I've got an order for that in at 2560. Walmart's at 140. GAN, which was one of the top stocks for 2021 that we put in, just gaming stock, the sports betting stocks in general. GAN was one that I was interested in. So I have an order for that. And then lastly, CVS, which we've talked about a lot.
Yeah.
I've got a 6605, which I don't know if that's going to hit. We'll revisit this on a weekly basis. But I'm trying to get great entries. I don't care if these don't fill. They can sit for days or weeks. I want great entries. And so most of them won't fill in the day I put them, but this is more a week to week, month to month situation.
Yeah.
Starting 2021, you guys will see more of it in the mentorships, and certainly we'll be pushing more of that in general, because that's really what, we talk about having a short-term swing and a long-term swing. We want to show you guys how those work together. And we've already had situations where Brad's been like, all right, I'm done with it in the short-term swing training account. But you've been kind of iffy. And it's like, well, yeah, we move it to the long-term account and we get it. So Peloton, Rocket, Zoom, Tesla, Costco,
Salesforce.
CRM, and CVS are all in the long-term account. CRM was the one that you were struggling with.
Yeah. Salesforce, I just got bored with it. And then we were like, well, we know it's worth holding long-term. And so we'll just hold it long-term and put it in a long-term account. It still struggles to get up over 228, even though it briefly did the other day, but we still feel really strongly about holding Salesforce for I would even say years to come. I think it's going to continue to do really well, but definitely for the next 6 to 12 months. But yeah, for this short-term account where I'm kind of like actively in and out of things, not necessarily day trading, but short-term swing trades, it just made sense to move on to something else that was a little bit more volatile than this was.
Yeah, and for all of you guys worrying about Big Felix, listen, we're just bantering. He's not going anywhere. He's clearly one of those people that wants to banter, and we're bros here, so we can talk trash, and there's no hard feelings. So I'm sure Big Felix is not offended in the least bit, and we're not offended by the nonsense that's coming out of his mouth.
I didn't say that Big Felix is an idiot. I just said his ideas are dumb.
Oh man, that's hilarious. He's not going anywhere.
No, he's not.
Go ahead.
George, thanks for the donate, bro. Said thanks for the good stuff this year. Congrats on the studio. Definitely earned it. Have a good Christmas, crew. Oh, and Fat Man Zoom, sort out the fireplace. I know. I'm kind of sad that you're not going to. Well, we'll probably still do some remote streams, but I'm kind of sad that we're not going to have the fireplace jokes anymore when we moved into our new studio.
Jason, Fat Man Zoom, could we look at the shit list? Man, I haven't kept up on it, but it is no doubt going to be a major focus of 2021. And so I will update you guys on it. And I think I'm going to do I got to just create a cadence. So maybe every Monday I pin it on my Twitter, and you guys can see it, but I haven't kept up on it, to be honest. So I really want to do the list. I think it's something that's fun. Yeah. And I think it's something that deserves for these trolls out there.
Yeah.
Naked fireplace.
Maybe
Why
we
you
just
guys
need
get on me about my fireplace.
Maybe we can we should buy one of those electric fireplaces for the space. Something that so we're not without it.
I mean, come on, guys. George, what am I going to get with this 5 pounds? What am I going to get for the fireplace? You tell me.
You could put a candle in there so that at least there's a fire burning in the fireplace.
Yeah, for sure. So the last thing I just wanted to mention overall is next week, just kind of talking about next week, talk about the Santa Claus rally. Because the one thing I wanted to talk to you about, or what we mentioned offline, was you had mentioned the Santa Claus rally a couple of times.
Yeah.
And you may have mentioned it specifically, but I didn't hear this. I didn't realize that the Santa Claus rally was specific days. And so for those who don't know what the Santa Claus rally is, why don't you tell them about the Santa Claus rally?
So the Santa Claus rally is essentially historically, and it's not guaranteed, it doesn't happen all the time every year, but historically we'll see some pretty extensive buying. We'll see a nice rally in the markets leading up to the end of the year. It usually starts 5 trading days before the end of the year. So it's the Santa Claus rally, but usually it's after Christmas. So on Monday, and today's technically the first day of it, but on Monday we'll start to see some really should likely see some really strong moves out of the Santa Claus rally. But there's some catalysts here that probably may stunt it to a certain extent. We have stimulus issues still People just ain't getting paid like they should be, and everybody's arguing over how much the American people should get. So it's just been a huge struggle, and I think it could end up being what stunts the Santa Claus rally if it does end up getting stunted. But I have every reason to be bullish in the markets overall as they are just closing here. I don't know. We'll see what happens, but that's typically what happens in a Santa Claus rally is that you see a really nice move up towards the end of the year. And then I would say probably on New Year's Eve, you start to see some selling. You start to see some selling because there's either people selling for tax issues, they're selling some of their losses. So you might see some downturns on that. But that's usually what typically happens in the Santa Claus rallies. You see some sort of move up.
Yeah, I know primetime is Zoom in the red zone. Zoom has been a challenge and been a frustrating stock.
Oh,
I had exited out. I'm back in it because I 400. I feel good about it, so I'm scaling back in. I can't tell you, like I don't know what I think is going to happen with Zoom. All I know is that I am very confident in that business, super confident. I mean, Eric Wan, their CEO, just got voted the #1 CEO in the country. So, like, they've got great leadership. They've got a great model. We've said time and time again.
You know what's crazy?
What all the catalysts are for it. And now they're going to make a run at like email, which you've talked about before, email and sort of workflow management.
Yeah.
Man, they have a lot of things going for it. It's had a tough go.
Yeah. You know what's crazy? I meant to say this. Did you know the story behind their CEO?
Yeah, but I think you sent it. You sent me like a tweet about it. Go ahead and
I think so. I might have. So like he was Chinese born, and I think he tried to become a U.S. citizen. He got rejected an insane amount of times, like 18 plus times or something like that. Finally got it, and now he's worth what, $22 billion. Like, it's just what a story for somebody, you know. It's pretty wild though. The company's great. People have tried to shit on this thing and make cases where, you know, Microsoft is going to come in and take their market share, or Facebook even tried to do that. And when Facebook made that announcement back in the springtime, I said, absolutely not. Zoom at that point was valued somewhere around $100 a share. And I said, this is a clear buy. And so they're proving my point that there's just no better company out there that provides video conferencing service better than Zoom. There are other ones that have video conferencing services, but none that are better than Zoom. When Microsoft bought Skype, they literally just, to me, in my experience with Teams, they literally just bought Skype and slapped some Microsoft and some of the like pretty stuff on it, and it's still Skype at the end of the day. It's trash to me, in my opinion. Whereas Zoom is just nice and easy to use, especially from a business standpoint, bro. I mean, we've taken advantage of the webinar features that they have. Like, there's just so many good stuff with them, and the fact that they're moving into the email side of things, there's tons of upside for Zoom. So if you guys are worried about the here and now, I would encourage you, especially if you're looking to hold this longer term, to maybe look at this from a little bit more of a bigger picture. If you're looking at this from a chart standpoint, I would say that there's definitely a case where this could come back down to 360s. So just be prepared for that. If it doesn't, be happy. But I think that we could potentially see that come down to that level.
And figure out what you're going to do before it comes to the level, so it's not emotional. So you said, hey, I knew it was going to go down there. And we've said this before. If you love it at 400 or 500, why don't you love it at 400 or 360?
Right.
And so don't sort of be a prisoner of the moment. But I'm going to tell you two things where it's a very rudimentary sort of like basis for why Zoom is incredible to me. On top of everything, I'll tell you, healthcare, they haven't even monetized education yet. They have recurring model. They have hardware coming out. There's so many bullish things. Like, don't think that this was it for Zoom.
Right.
But here's two little simple things. One is mini Zoom. My daughter, who's 7 years old, knows how to operate Zoom seamlessly, knows it, calls it Zoom, knows everything. Like, just like an iPad, she can swipe an like toddlers can use iPads. It makes you realize like how long it's going to be in their lifetime and how simple and intuitive it is. She won't be able to use Teams, right? So that's number one, is how easy it is for children. And on the we do a family Zoom every Tuesday. she gets on it easily.
Yep.
She knows how to run it. My grandmother, who's technologically challenged, she gets on it, right?
Yeah.
So if you have everybody that can get on it, your user base becomes greater. So that's one. Reason number two, and it's simple, but I think it's the most impactful thing I can tell. The business has managed to change the name of what it is, right? So like Q-tips, when you say I need a Q-tip, that's a brand. That's not what the product is.
Right.
The product is now Zoom. You don't hear people saying, hey, I got a family Teams.
Right.
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 And they've managed. If you ask what it is, you'd be like a Zoom call. We know what a Zoom call is.
Yep.
They offer video conferencing.
Yeah.
And because of that, to me, it makes me feel confident moving forward. And I know it sounds simple and I know it sounds stupid and basic, but the reality is they are so far ahead of all their competition that the likelihood that they're going to be able to get knocked off anytime soon is extremely, extremely low. So just remember that when you're thinking about the impact that's made on our culture in such a short amount of time.
Absolutely. Absolutely. And so, if we didn't make a bullish case for you, then I don't know what else to tell you. There's so many good things going on with Zoom, and it's just being impacted by, the potential for people, or the potential that people are looking at this, where it's like, oh, well, the vaccine's coming back. Things are going to get back to normal as they were before the Rona. And the fact of the matter is that they're not. I don't like to throw around quote unquote the new normal, but remote work is here to stay. It's only going to continue to grow. And Zoom is the biggest benefactor of that. Hands down.
Yeah, absolutely. Funny pranks gone wrong. You asked about Amazon. Listen, guys, 2020 top stocks for 2020-21. We just, I don't know how many times I say that, but go check out the video. We released it last night. If you haven't seen it, Amazon is on that list of our top 10 stocks for 2021. It's been sideways. There's not much to say. We love it. Yeah. But if you want to get more specifics on why, go check that out. That's a buy, never sell type stock in general. And then next week, I wanted to just touch on, next week, the market's closed on Friday, right? Yeah. So we got 4 trading days.
Yeah, Friday. Yeah, sorry.
We got 4 trading days. I just want to get your sentiments on like, what to expect next week, giving it's a closeout of the year. And what are your sentiments for the market?
Overall, I think that even though the stimulus has been kind of a bummer, I think the market ends up closing and doing really well leading up towards the end of the year. Just in case you guys don't know, the market was a half a day today because it's Christmas Eve. It won't be a half a day on New Year's Eve. They will be open the entire day. So just keep that in mind. But I think we'll have a green close. I think we'll do really well leading into the end of the year. I am pretty heavy into equities right now. I have almost all of my cash in stock, and there's a reason for that. I still feel really strongly about the market overall, and I think we do well.
Yeah, and I don't know what our schedule is going to be like, but we'll keep you guys posted next week. We're kind of chilling out a little bit, to close out the year. Yeah, you'll see our faces. We're definitely going to have pre-recorded video for sure. Brad has been talking about, we're probably going to do one where sort of like reflecting on the year or sort of a year look back on where I was right, where I was wrong, our wins, our losses, and sort of talk about the ones that stand out for us. And then possibly predictions for 2021, like bold predictions, not basic, like bold predictions.
Some crazy outlandish ones.
we predict. So all that stuff we got in the works, but 2021 is going to be big. We'll definitely close out. We have to do some sort of live stream to close out the year because I want to get people excited about, we have so many things in the works.
Yes.
And guys, the bot was just the beginning. The dividend trading bot was just the beginning of everything else we're doing. So shout out to all the people that sort of on the first cohort of the trading bot.
That, and we haven't even, we have a lot of things that we are looking forward to. Guys, we may very well have professional athletes on our show in 2021. Talking about investing. We're going to have like a legit podcast type atmosphere with some big personalities that we plan on having on the show. So we're stepping it up. We're going to have a lot of really great stuff coming. And we're looking forward to you guys being a part of it.
That's all I got, brother.
All right. Guys, we're out. Have a Merry Christmas if you celebrate Christmas. If you don't, have a great day off. Have a great long weekend. And we'll catch you guys again for Stock Watch Sunday. If you want to be a part of the Chaos Crew, make sure you're hitting that join button or the link in the description. And we is out.
Merry Christmas.
Merry Christmas, my man.
Bye.